Hello everyone, here are the latest market news on December the 4th, 2020. Amazon accused of tax evasion and poor practices. More than 400 lawmakers from 34 countries have signed a letter to Amazon.com Inc. boss Jeff Bezos in support of the campaign, claiming that the technology giant has evaded debt for fired workers, societies, and the planet. The Make Amazon Pay campaign was launched on November the 27th by a coalition of more than 50 organizations with demands including better working conditions and full tax transparency. On Thursday, the company said that although it has been scrutinized by policymakers, many of the issues raised in the letter were related to misleading allegations. The company claims that its profits remain low given that retailing is a highly competitive, low-margin business in which it invests heavily. Global stocks volatile due to vaccine uncertainty. World stock indices on Friday morning showed mixed dynamics. Investors continued to sum up the record rally of world stocks in November. News of potential problems in the COVID-19 vaccine supply chain also limited growth. The largest MSCI stock index in the Asia-Pacific region outside of Japan rose 0.78%, surpassing its peak on November the 25th, thanks to growth in the high-tech sector, while Japanese Nikkei fell 0.22%. In New York, the S&P 500 erased earlier gains after the Wall Street Journal reported that Pfizer had reduced its plan to deploy COVID-19 vaccine because of supply chain impediments, later rebounding by 0.23%. In addition, a $908 billion coronavirus plan is gaining momentum in the U.S. Congress Thursday when conservative lawmakers announced their support. Oil prices rise after OPEC Plus production compromise. Oil prices rise on Friday and could rise for a fifth week in a row after leading producers agreed to continue to restrict production to combat the effects of coronavirus, although the compromise was not as large as expected. Futures on Brent grew 2.11% to $49.74 per barrel, while futures on WTI grew 1.84% to $46.48 per barrel. OPEC and its allies, led by Russia, agreed to gradually increase production by 500,000 barrels per day from January 2021, but were unable to make a decision on policy until the end of the year. It was previously expected that the current deal parameters would be extended at least until March. U.S. projected weakest job growth in half a year. U.S. employers probably hired the smallest number of workers in 6 months in November, hindered by the resumption of new cases of COVID-19, which, along with the lack of additional government funds for assistance, threatens to reverse the recovery from the pandemic recession. The Labor Ministry's report will be closely monitored. On Friday, infections, hospitalization, and death jumped, causing some economists to anticipate a decline in employment in December or January as more restrictions are placed on business. According to economists, the number of jobs in the non-agricultural sector probably increased by 469,000 last month after growing by 638,000 in October. That will be the smallest gain since job recovery began in May and the fifth consecutive month of slowdown in monthly job growth.